more flat than what the pre-opening suggested. It's still up about 8 points.
So up around 50 odd points for the Nifty. We have the Bank Nifty, which is up around half odd percent.
We've quickly piled on the 400 points from the levels of around 11,600 that we saw on the budget day. We're back above the 12,000 mark.
The market's seen a massive breakout in the last 30 minutes.
Because the bulls have moved on, and how? So 12,000 is back.
India continues to participate in a global up move. Market higher for the third straight day. Short covering and new buying leads Nifty near 12,100. Metals, realty and energy companies do well. Mid caps and small caps also participate. Crude prices rise mildly after yesterday's 1% slump.
Zee Entertainment cracks over 7% after it receives an MCA notice under Section 206 of Companies Act. Zee CFO responds, says the notice is generic in nature, also says that they will submit information sought at the earliest. The stock slumps in an otherwise up-and-up market.
Slew of good third quarter numbers. Bharti Airtel gains 2% after an operationally strong set of numbers. SRF2 soared 6% after a better than expected set of numbers and strong management commentary. It was led higher by its chemical business. REC rallies as well after profits jump 30%. Asset quality also improves.
Well, the Auto Expo 2020 kicks off with a strong lineup of electric vehicles and SUVs. Automaker Maruti says it has now turned its focus to affordable and practical solutions in the CNG hybrid, mild hybrid space. Tata Motors reiterates that the economic slowdown has impacted sales, even as it expresses hopes of a revival in the future.
The CNBC-TV18 monetary policy poll participants unanimously expect the RBI to hold fire when it announces its rate decision tomorrow. 50% of the respondents believe the central bank will keep its policy stance unchanged.
Well, Dalal Street continues to rally in line with the global up move. Well, those were the top 5 headline stories which defined the day. Hello and welcome to a fresh new edition of Markets Today, the show where we tell you all that happened in the 6 hours of trading. And of course, we get you all the opinion as well. I'm Prashant. With me today, my colleague, Mangalam Malu. Hi, Mangalam.
Hi there, Prashant. Good evening. Thanks a lot for that. But that's not all. In fact, it's quite a packed show today that we have. We get you market opinion coming in from Caesar Mastery of Goldman Sachs, who says that there is more scope for money to move to India. Atul Suri of Marathon Trends believes that the Nifty should touch 13,500 in 1 year. We also caught up with Rohit Gupta of Zee Entertainment, who responds to news about the company's MCA probe and says that the information sought by the Corporate Affairs Ministry was generic in nature. Also on the show, we have Gantar Bushek of Tata Motors and Kenichi Ayukawa of Maruti Suzuki from the Auto Expo, which kicked off today. All right, Prashant, so it's been 4 days of buying for our markets. We saw an 800-point decline all of last week. 400 points we've gained in just the last 3.5 days.
Yeah, three days I was counting in my head.
Right.
So Monday, Tuesday and today. So, I mean, absolutely, I think the first point that one needs to make is this is global in nature. Absolutely. You look at Asia, you look at US, you look at Europe. Tough to say which market is leading which. But I would say, I mean, if you look at what the Chinese market did on the second day of trading, I mean, that kind of sent a signal. I mean, the market was not up wildly. It was just up about 1.5%. I'm talking about yesterday. On Monday, it declined in a big way. That was expected. But the second day, after it came back from a long holiday, it was up 1.5%. It's just a signal that, well, the epicenter of the problem, which is I'm talking about the coronavirus, the mainland market, 80% of that market is made up by retail investors. That ends up 1.5%, and it ends up today as well. And I think, that more than anything else, I think sparked this move around the world, be it in Europe, be it in Asia, and of course out there in the US as well. US, of course, seems to be on steroids. You look at stocks like Tesla, etc. It's been an out-and-out kind of winner. There were also some media reports that there has been a drug breakthrough for coronavirus. There was a Reuters report. There was a Chinese state sort of TV, I think, which reported that they've discovered a drug which now potentially could treat people infected by the virus in a short period of time. But I think we'll need to take this information in slowly. We've got these kind of reports earlier as well. Many companies are working on it using their own funds, government funds, etc. And of course, I mean, the race, it's a race to develop the drug the fastest. I mean, the need of the hour is a drug like that. But do we have it? I mean, I don't think we can say it with certainty. But, I mean, markets responded in a very positive way when the news came through. And, indices at least took off in a very big fashion. Oil prices remain weak. There was a bit of a jump. There are these intermittent kind of bounces. But broadly, I think there is acceptance that demand remains very weak unless something is done to output itself. So that is a big one. And, of course, global manufacturing and data points, etc. Our own manufacturing PMI, global manufacturing PMI numbers have been pretty solid. So, I mean, that's broadly, I think, the thrust of what we are seeing here. You look at flow numbers from Tuesday, they were not anything great. DI and FI is bought in aggregate net of about 900 odd crores. The Sensex was up 1,000 points. Nifty was up 300. We'll wait for the data for today as well. But I think it should be a mix of continued short covering and some fresh buying that we've been seeing. But let's get through stocks, Mangalam.
Absolutely. I'll get through stocks, in line with the broader theme that you spoke about, how it was global in nature. So it was these global stocks which did fairly well as well. So we had something like a Tata Steel, JSW Steel, Vedanta, Hindalco. All these metal stocks surged in trade. Apart from that, we had the Tata Group stocks doing exceptionally well today. They were all in focus. So we start with Tata Motors, a big gain seen on Tata Motors. So tell you what about Tata Motors, it's got three benefits to it. One, good commentary coming in from the management for the way ahead. Secondly, post a smooth Brexit that has taken place as trade negotiations begin between the UK and the EU, we have some positives coming in from there as well. And finally, the fact that the fears of coronavirus is ebbing, or the fears of coronavirus spreading to a major issue are ebbing. We see that big move come by on Tata Motors. Tata Global Beverages, of course, the internals for their numbers were strong. Titan as well reported a good set of numbers, and the management commentary was good as well. Talking about good results and good management commentary, Bharti Airtel, yet another record high for that stock. What a big mover this has been over the last few months. 80% moves that we've seen in just the last 6-7 odd months. But among the losers, we had Z Entertainment. MCA probe worries the company, and this despite the management clarification coming on our channel that this has nothing to do with any sort of corporate governance issues. The street did not choose to believe that. In fact, the stock ended lower today, and it's poetic that the Auto Expo has started, and some of these auto stocks are in a slow lane. So we saw about a 2.5% decline on Maruti, as well as Hero MotoCorp as well did not do too well. Big movers today otherwise were Shriram Transport, continuing its move from yesterday after a good set of numbers coming by. SRF, of course, we had the management commentary at 3:30 yesterday, the con call, and the stock hit a fresh record high today as well. REC, good numbers coming in, asset quality contained, and behind REC we had PFC running as well. And finally, Prashant, you spoke about how US markets, some of them are on steroids, the likes of Tesla. We have our very own Tesla equivalent here, and that is IRCTC. Up and about, just a few months since the IPO came by, the stock has already run 5 times from there. It's up 62% in 2020. Talk about, the stock zooming ahead like a super fast train, if you must. And I was just doing some maths. If a retail person who got 40 shares, which was the minimum lot, at around 12,880 in the IPO, that guy would have been worth 60,000 right now. So those who perhaps saved some money to go into a train may now go by a flight, and that to a first-class flight.
Well, yeah, absolutely. That's a good way to put it. You could have bought it on the day it listed at about, I think, 600 or something?
Then that would enable you to take an economy class flight, not the business class one.
All right. Well, let's get you some opinion now as well. Growth may slow down due to the coronavirus outbreak, although, as we've been saying, markets are shrugging that off for now. But that's the word coming in from Caesar Masri of Goldman Sachs. He also adds that there is now more scope for money to move to India because of issues in China. Listen in.
I think the message from us is that the global recovery for the full year is still on track, but of course there are big uncertainties in the near term. Our economics team has shifted their projections for growth this year, specifically in China, of course, for the fourth quarter, assuming growth might slow to as slow a pace as 4% sequentially. But of course, they assume there will also be some sort of policy response to help improve growth by the second quarter, getting us back to something in the order of 5.5 percentage points growth for Q2. So certainly a pretty meaningful shock earlier in the year, but some recovery. If you look at the high-frequency data, PMI data and things like this, it's been relatively weak across the board for a number of emerging markets. But actually, the latest print in India has been fairly positive. So actually, we think India is one of the better growth stories for this year, and that probably matters most when looking at the markets. The Nifty target we have at 13,000, so that's a little bit above where we were in January, so we can get back to those highs, and I think again justifies an overweighting allocation. With India, as we mentioned, growth is returning. We have fairly robust earnings estimates for this year. We think in the order of about 16% growth for a calendar year 2020, and maybe 13% for a calendar year 2021.
All right, that's about Caesar Mastery, but we also spoke with Atul Suri of Marathon Trends, who says that the broader markets are relatively outperforming the frontliners. He also expects the Nifty to hit 13,500. Take that for a target by December. Take a look.
Selectively, mid-caps were ignored, and you find them they're getting rewarded. Now, let's look at the fall that's happened in the last month and a half. Nifty's fallen 6.5% from the high, but the mid-cap index just fell 5.5%. For the last 2.5 years, whenever the Nifty corrected, the quantum of correction in the mid-cap was far deeper. This is the first time that I'm seeing relative outperformance of the mid-cap index relative to the frontline Nifty through a correction in the last 2 years. In terms of Nifty levels, I have been talking about a 13,500, and it's a year and a half target. So from here also, I think that we can have a 12, 13, 14% up move that is possible. So as I said, I do not play. I play for longer term trends. And as I've been saying that we are seeing this big global liquidity surge. So I make a case that ultimately we are in an uptrend. There is money to be made. Yes, we'll have budgets. And yes, we have a virus thing whose outcome we don't know. But the fact is that global markets are on a tear. And trying to be too bearish, can be very painful.
Oh, trying to be bearish can be painful. Too bearish, I think, will really hurt. But that's opinion from Atul Suri from Marathon Trends. Well, we move on to the second headline now. Zee Entertainment is the biggest loser on the Nifty after it tanked over 8%. This after we told you yesterday that the Ministry of Corporate Affairs, the MCA, has ordered an inspection into the company's financials. In a response to CNBC-TV18 exclusive, Rohit Gupta, CFO of Zee, spoke with us, and he said that the information which has been sought by the ministry was generic in nature. It wasn't specific with regards to governance issues. He went on to add that Zee is collating all the information which has been asked for and will submit it to the ministry at the earliest. Listen in.
The information which is sought right now is very generic, and most of it is already available in the public domain. So like I said, we are already collating the information, and it will be immediately submitted. So there is no specific information request at this point of time. What they have requested are annual accounts and things like that, which obviously contain all the required information which we'll be submitting. However, let me take this opportunity to clearly mention that this is not related to any corporate governance issue whatsoever.
All right, and let's move on to the third headline today then. Bharti Airtel surged over 2%, yet another record high for the stock after the company reported a good set of numbers in their third quarter. The company's losses narrowed on a quarterly basis, and at the same time, the operational performance improved considerably for the Indian vertical in specific. It was better than expected. Wireless business in India saw a sharp surge in margins. This due to tariff hikes that the company had taken. The margins have come in at 35.9%. This compares with 19% in just the previous quarter. That's not all. They also saw net additions of close to 3.5 million, a little more than 3.5 million mobile subscribers this quarter, and saw its highest ever 4G data net additions of almost 21 million subscribers.
Well, we stay with the telecom story, but away from numbers, but with Bharti. The company's plans to sell stake to its in its tower business, Bharti Infratel, seems to have hit a roadblock. It was talking to private equity players and American tower company. But now, with the merger of Bharti Infratel and Indus Towers not going through, not being consummated because of lack of DOT approval, this transaction, which is Bharti trying to sell stake in Infratel, is also on the back burner. Kritika is here reporting on the same. Kritika.
The merger between Bharti Infratel and Indus Towers was to create the second largest tower company in the world with about 165,000 towers. It was to be completed in October, but the deadline had to be extended to December, and now the long stop date is Feb 24th. The reason for that is that they haven't gotten the final nod from the Department of Telecom. Now, we understand and we have been reporting that for the last many months now, almost 6 to 8 months time, the company has been in talks with several players. They had reached final talks with players like ATC, KKR and other private equity firms. Even Brookfield was in the race. KKR was looking to do a deal where a clutch of private equity investors could look at taking in a controlling stake. If the deal was to go through, it would have brought Bharti Airtel about 35,000 crore rupees. Remember, they have a debt of about 1.08 lakh crore rupees. They have raised funds, yes, but to be able to pay liability, to be able to bring down debt as well as expand infrastructure, the sale of Infratel is critical. However, we understand that because of the repeated delays, the prospective or the potential investors have pulled out. And now we learn that Bharti Airtel has decided that they will only review talks and go back to the drawing board, restart the conversation when the final approval comes in and the exact date for the merger completion is clear. They need about a month's time for the merger to be completed even after the DOT approval comes in. As far as the DOT approval is concerned, my sources do say that additional details have been sought and the company has been given an indication that in the next 2 weeks' time there should be some clarity on which way the DOT is heading as far as this approval of this mega tower deal is concerned. We of course reached out to all the players. They did not want to comment on the story.
Kritika, thanks a lot for that. We'll stay with the earnings action itself. SRF was another stock that soared over 6% today, courtesy a strong set of third quarter numbers. The numbers which came in better than expected were led by chemical business. Sonal Bhutra is here with all those details. Sonal.
Numbers were good, and yesterday the commentary on the conference call was even better. So let me start with the specialty chemicals business that did really well, and the management has hinted that they will actually exceed the guidance of 40 to 50% growth in this particular business, and the agrochemical business particularly did really well. They saw good growth in Latin American and Brazilian regions, so that is why the stock is also surging. Apart from that, in terms of the fluorochemicals business, where they import a lot of raw materials from China, they say that the impact of coronavirus will not be too much because they don't have a long-standing contracts with the Chinese companies and they can actually divert it to the other companies. Packaging business also, well, it was good this time around. The spreads were quite flat on a quarter-on-quarter basis, but new BOPET lines are coming across the globe and this could put some margin pressure in quarters going ahead. So that is something I'll be watching out for. And technical textiles, that is one sector that is in focus because margins this time around they contracted on a YOY basis. However, the management says that they have seen some recovery December onwards, so we will be tracking that closely. Because of the results, Motilal Oswal has increased the FY20 profit estimates by 18% and stock also showing that kind of enthusiasm up around 5%.
Okay, I mean SRF has done very, very well. Sonal, thanks very much for that. Rural Electrification Corporation REC saw a 6% rally after it posted a 30% jump in its profits for Q3, while the company's asset quality improved, loan growth rates slowed down. My colleague Abhishek is here with more details on REC's numbers. Abhishek.
You can't ask more when a lender actually improves his asset quality. So the gross NPA in absolute value declined by 4.5% quarter on quarter. They had a one-time settlement which led to 480 crore of recovery. Two accounts worth about 66 crore got upgraded to standard asset from NPAs. So the gross NPA ratio is perhaps the lowest in 8 quarters at about 6.4% when compared to 6.86 in the previous quarter. Disbursals largely flat YOY. Sanctions declined 26% quarter on quarter. The loan growth slowed down a bit to about 14% when compared to 17% in the previous quarter. However, the profits were really high on 29% YOY and about 26% sequentially. Back to you.
Abhishek, thanks a lot for that. With that, we step to a short break, but come back and we will be back in a jiffy with all the other headlines that we just spoke about. Welcome back. You're watching Markets Today. We have been discussing most of the things that made news for the day. Let's move on to the rest of the headlines that we were tracking for you. And the fourth headline today was India's largest automobile show, which is the Auto Expo 2020, has kicked off in Greater Noida. Electric vehicles and SUVs are the ones that hogged the limelight on day one, Auto major Maruti, however, says it has now turned its focus towards affordable and practical solutions in the CNG hybrid and mild hybrid space, while Tata Motors reiterates that the economic slowdown has impacted sales, even as it expresses hopes of a revival in the future. Take a look.
Cyclical impact coming from the economy, drop in GDP and the growth rate. At the same point of time, we have seen overlaid, underlaid, depends how you would like to see it, also a structural impact. We have seen lots of uncertainty in the marketplace. If we put all of this together, very, very unfortunate coincidence.
We have proposed a practical solution for environment-friendly product. Of course, EV is the final destination maybe, but it takes time, and we have to take care about today or tomorrow the environment issue. That's why we have proposed the most affordable and the practical solution. It's a CNG and the hybrid, mild hybrid, and strong hybrid.
You've got the likes of Kia, the MG Hector, which are creating a lot of disruption in the market. What is going to be Maruti's response to these vehicles?
No. It's not correct word. Disruption is not correct word, because we are welcomed any time at the competitor.
Okay, that is the opinion from the Auto Expo. The fifth and the last headline today then, Budget 2020 is done, and the next big event that everybody is closely watching is what the RBI will do. That is tomorrow. This is the last monetary policy for this financial year. The two big challenges for the central bank are retail inflation, which is at 7.3%. On the other hand, growth, which is slowed to over a 6-year low. We conducted a poll as always, and my colleague Ritu, who conducted that poll, is here with details of what the poll finds. Expectations, Ritu.
After the union budget, all eyes are now on the RBI as it gets set to announce the last policy for this financial year, and our poll suggests that the Monetary Policy Committee may maintain a status quo on rates yet again against the backdrop of rising retail inflation. Remember, the last reading on inflation for the central bank was an unflattering 7.35% for December, far higher than RBI's comfort limit. Now, for the entire calendar year, 30% are expecting rates to be left unchanged, whereas 40% see another 25 basis point reduction through 2020. Remember, RBI had also cut the GDP forecast for FY20 to 5% sharply in the last policy. Majority of our respondents expect that also to be left unchanged in this policy. For the next year as well, most of our respondents again expect RBI to leave the 5.9 to 6.3% forecast unchanged. Remember, the economic survey has also pegged the GDP growth for FY21 at 6 to 6.5%. Now, the retail inflation estimate of 5.1 to 4.7% for the second half of the current fiscal is widely expected to be raised, as is the 4 to 3.8% forecast for the first half of the next fiscal. The union budget, of course, is a key input for the monetary policy as the government's finances impact everything from growth to inflation. The revised estimates for the current year from the budget indicate that the government has refrained from heavy spending. So 90% of our respondents expect the MPC to look through the government's move to revise the fiscal deficit target. And lastly, the tone of the policy is more or less expected to be similar to the last one, with some expecting a slight change.
All right, Ritu, thanks a lot for that. So with an eye on the RBI's policy tomorrow and the other one on weekly options expiry, we wrap up on this edition of Markets Today. Thank you for tuning in.